until now.
More than just business news, we're news for business people.
Hello and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza, and with me is Agam Vakil. Hi, Agam.
Hi, Navneet. Let's talk about the top headlines. Of course, before we get into the headlines, hang on. This is Transporting, and this is where we deep dive into several of these companies as well as trends, and we also get managements as well as a lot of analysts who can talk about the different trends. But now let's go on to the headlines, and starting off with Indian markets, which trade flat, with the Nifty trying to defend the 10,300 mark. But Bombay Dyeing hits an upper circuit of as much as 5% in opening trade as investors cheer good earnings. And Tata Motors, HPCL, as well as Aurobindo Pharma are among the three Nifty companies set to announce their earnings today. And US President China says that China is taking unfair advantage of American workers and companies, but blames his predecessors for this condition.
All right, let's take a look at the markets. They are off days high. Remember, we had a gap up opening coming about after a positive start was seen for the Asian indices, but currently the Indian markets are off days high. Nifty is just about trading with gains of nearly 13 points, and Sensex up almost 57 points. The Bank Nifty is going to be in focus today as the weekly options contract, they expire today, so you can expect a bit of volatility for Bank Nifty. As you can see, that's the intraday chart. Bank Nifty too has come off days high. Where can the expiry take place in terms of options data? It is clearly indicating it can be in the range of 25,000 to about 25,500. Let's just pull up the Nifty contributors chart and see which are the stock which are contributing to today's gains. Reliance Industries, the biggie, that's the heavyweight on the index, followed by ICICI Bank. HUL has been pretty strong. It had a gap up opening today. And from the consumption space, you also have Asian Paints. These are the top four stocks which are contributing to the gains. What's dragging the index lower are once again your heavyweights. HDFC almost 7% weightage on Nifty. ITC is dragging it lower by 6 points. Coal India, Axis Bank are a couple of the other counters. But which are exactly the top gainers currently on Nifty are the likes of Reliance Industries. India Bulls Housing is doing pretty well, and we've already spoken about Asian Paints, ICICI as well as HUL. On the losing side, you have stocks like Coal India. That counter is down nearly 2.5% today. GAIL, Aurobindo Pharma are a couple of the other counters which are dragging it lower. But the volatility index was going up in the last three trading sessions, but the India VIX since the morning session has cooled off today. But I feel it is off days low. Also, it's currently at about 12.93. The low of the day was nearly in that range of 11. All right, it also touched 11 in today's session. So looks like the volatility is once again inching higher, and the broader markets are performing better than the benchmark indices.
They are. Navneet, it's interesting that you said that the volatility is inching higher now, and you've also suggested that the Nifty is trying to defend the 10,300 mark. When it comes to the broader markets, when it comes to the advanced decline ratio specifically in this case, that's in favor of advances. So if you consider the Nifty 500, we have about 3 gainers as against 2 losers. In the broader markets too, if I were to consider some of the gainers, again, IFB Industries is one counter which is gaining as much as 7.5%. Rain Industries is the other counter I want to highlight. Now, Rain Industries is something which has come into focus over the last couple of months. It has had a stellar run, not only over the last few months, but perhaps throughout the year. And this is on account of improving prospects for that company. So if you see how it's done over the last 3 months, you'll notice that it's moved up quite substantially. There you have it. That's a chart. Followed by that, Indian Bank also moving up by as much as nearly 6%, and this is again on account of earnings. We have gains in Greenply Industries, Petronet LNG, Bombay Burma, ITD Cementation, which is also in the infra space. And of course, we will be having a conversation with Dilip Bilkon to take stock of what's happening in the infrastructure sector right now. Welspun India and Bombay Dyeing, of course, as we spoke of. In the losing end, we are looking at weakness in Gujarat State Fertilizers. Shilpi Cable Technologies, remember, it has lost as much as 95% in the entire year. Gujarat Alkali, Gujarat Narmada, as well as MMTC, followed by Himachal Futuristics, all losing anywhere between 4 to 5%. Some weakness seeping in for Snowman Logistics, Kerala Healthcare, as well as Navneet Education. Navneet. So that's what we have in terms of the broader markets. But as I said, it's largely towards the advances, and that can be taken as a positive if it comes down to the Nifty, or for that matter, the Nifty 500 defending those crucial levels.
Well, Nifty has to defend the 10,300 mark, which it reached in the last hour of trade yesterday. Let's see how the closing pans out today. But on trend spotting today, we discuss the trends witnessed in the infra space as we connect with Rohan Suryavanshi of Dilip Bilkon. We also decode the September quarter earnings for Pidilite Industries as we connect with the Executive Director, Apurva Prasad. And we discuss the increasing footfalls in quick service restaurant in last 2 quarters with Aditya Joshi of Anand Rathi.
Okay, so let's put focus on Dilip Bilkon. The counter has clocked in gains of over 55% in the last 3 months, and a couple of months ago, the company too divested its entire stake in 24 road build, operate, transfer projects as a part of its debt reduction plan. The order book for the company has been seeing a healthy growth on a yearly basis, but does this indicate a growth in the infrastructure as a whole? Let's discuss this further in more detail with the head of planning and strategy at Dilip Bilkon, Rohan Suryavanshi, who joins us in the studio. Hi Rohan, thanks for joining us. Well, my first question will have to do with the sector in general. What you're picking up, now we've been told that there's been a lot of allocation, but execution, there are concerns about execution. So if you could give us an idea about the prospects of the sector and how that could apply to your company.
Agam, you're talking to a management who get bonus for completing their projects on time or just before that. Go ahead, Rohan, sorry.
Firstly, thanks a lot for having me on your show, and I must really compliment you on all your detailed research. That she knows that we've been the only company that has won early completion bonuses successfully in the last 5 years or so, and we've actually won about 320 crores of early completion bonus in the last 5 years. This amounts to about 1.5 to 2% of our total revenue. So kudos. Talking about the industry, like you mentioned, the ordering definitely has picked up. If I could give you certain numbers to sort of explain that, FY13, the ordering by the national government was about 1,900 kilometers in FY13. In FY17, that was about 16,000 plus kilometers. So you can see the ordering has jumped multifold, almost 8 times of what was just 5 years ago.
Right.
So there is no dearth of ordering for any of my peers today. And if you look at all of their order books, it's a very healthy 2 to 3 times of their trailing revenue. So none of us are in that kind of space. Now talking about, while the ordering has been fantastic, the problem and the challenge in this industry has always been execution. And like you pointed out, that's kind of lagged behind.
Right.
And that's lagged because of multiple reasons. While the reasons can be attributed to both parties, whether it's the government or the private contractor, a lot of the land acquisition issues, the environmental issues, all those things still do constitute a big portion of the problem that the sector faces. Besides that, we've also had certain players who've taken these contracts, but they haven't been able to deliver because they don't have their own equipment, they don't have their own manpower, then they're searching for subcontractors to do it, subcontractors run away. So the problems are many.
Right.
What would really differentiate a company in this sector? If you are able to control each and everything that you do. And that's where we really stand apart, that we own all our equipment, we have all our people on our rolls.
And you don't outsource much, right?
We don't outsource at all. We don't subcontract at all. So we have the largest equipment fleet in the country. We have 9,000 plus equipment spread across the nation. We're working in 16 states. We have 27,000 people working full-time for the company. These are all, my employees for whom all the statutory requirements are met. So unless you are able to control each and every aspect of your project, you will not be able to do, what you're able to do. And I think that model of, subcontracting we've seen, how it has panned out. And I
You
guess
know, your margins have been above, if I look at the other players in the same sector. How do you manage to garner those margins is what I want to understand, because there's so many troubles in this industry. The projects are not completed on time. Yours is the company which is not only completing the projects on time, getting bonus for that, but your operating margins have been stupendous.
Again, I guess, that's a question that I get asked very regularly. So again, you're just hitting the nail on the head. How is it that we're able to do something that nobody else is able to do? So let me actually take you through the whole process of it. If you look at the average industry margin, it's, EBITDA is around 12% or something like that. Now, how are we different from that? Now, when you don't subcontract, add another 1.5% or so to your EBITDA.
Right.
Now, when you own all your equipment, it becomes there's a depreciation. There's no rental, so it's a below line item. So add another 1.5% to that. Now you're able to do projects continuously before time. So we're able to win bonuses. Now, when you win bonuses, like I mentioned earlier as well, we add another 2% to my bottom line from that.
Right.
Now, when you do a project before time, what also happens is you are able to, if I'm able to do a 2-year project in 1 year, what it does is it saves my EMI for a year, it saves my salary for a year, so that besides the bonus that I'm already getting from the government, which is part of the contract, it is already an inbuilt bonus. So that adds another 1.5% or so to it. And eventually, because we do everything on our own, so we are procuring everything on our own. We're buying all the material. So there is an additional discounting that comes because of, the bulk buying that we do. We're the largest, client for Indian Oil, HPCL, BPCL, Ultratech.
And you've got pan-India presence.
Yes, we're present across 16 states in India right now. There is no other construction company which is present in as many states.
All right, so then can you give us an update on your order book as it stands, and perhaps a rough geographical breakup for it as well?
Geographical breakup would be that we're spread across the nation, from up north in Punjab to down till Kerala border. We're present in all major states.
Right.
The states where we have the largest order book right now would be Maharashtra, the home state that you guys are here. Then followed by Uttar Pradesh, and after that Madhya Pradesh. Otherwise, each state contributes about 5 to 8% to our order book spread across in all these 16 states, and these states constituting the biggest chunk.
Right.
Any kind of ballpark figure? What's the kind of bonus that you're going to get for FY18?
Sure, why not? So we will be getting about 100 crore plus of early completion bonus this year as well. We did that last year as well.
Okay.
So last year our top line was about 5,000 crores plus. This year we'll be posting a very healthy growth of...
Your September quarter earnings are not...
They haven't been declared right now.
It's
so
next week or something.
It is next week, yes. So 14th of
So I'm not going to ask you about the numbers, but was it better than the June quarter or something? Because it's monsoon, I understand. Seasonally, it's not a great quarter for your...
Why don't we wait and watch?
Okay,
Dilip always, surprise its investors positively. So
we hope...
Well, okay, so our in-house analyst also has a question on debt. Now, I understand that debt is a very important part of your business.
Right.
But are you comfortable with these levels? Are you looking to increase debt, looking to decrease debt? How does it play out now?
No, that is always, something that keeps us awake at night.
Right.
And that's how it should be for any company, because, you've taken an external borrowing and you're trying to grow your business. But while you do that, the reality of the sector is you need to take debt. You can't grow this business without taking debt. So right now, if you look at my debt equity ratio, we're about 1.3.
3 times?
Yeah.
Okay.
No, not 3 times.
1.3.
1.3.
Yeah.
1.3. So the debt equity is 1.3. This time, this year, we'll bring it down to below 1. Yeah, it'll come out to be at 0.8, 0.9.
So you sold your road project to Shremji to reduce the leverage, right? So what's the status of that? I think that money was going to be used for paying off the debt. No?
Yes, part of it is going to be used to pay off debt. Also, what it does is it makes us a very asset-light company, and it gives us a lot of free powder to just go ahead and bid for a lot of the projects that the government is now envisaging to give out. So it puts us in a very sweet spot, I think, given where our peers are in terms of how the debt equity is looking, or in terms of also how they've been executing. So we are in a very, very good place right now. And yes, a lot of portion of the money that will be coming from Shrem will be used to retire debt. But while that happens, we're also growing our top lines, and the top line in this sector can only be grown by adding more equipment, which we end up buying all of it.
Right.
So it's both those things go hand in hand.
Right. I'm not sure if it's too early to ask you this question, but are you expecting anything from Bharatmala?
Of course.
For sure, yes.
Yes, of
Yeah,
course.
so
That's
then-
our bread and butter.
Yes, right.
Yeah.
So then can you tell us a little more about
Any
what your
segments or
expectations
regions that you've identified where you're going to bid for Bharatmala projects?
See, we are agnostic about bidding when it comes
Okay.
to what geographical area we need to go, and that's probably one of the things that really sets us apart. When you look at the sector in general, 90% of the companies work in a single state. Another 5% will work in 2 states or 3 states.
Right.
And even within that, they will subcontract because they haven't built those systems, those processes that can enable them to, sort of really spread themselves out at any point of time. And a few more companies will do it in like 5-6 states. No company does it in 16 states. Because we're present in all these states,
Right.
we are absolutely agnostic about wherever we get orders.
Right.
As long as it meets our profitability criteria, and we're also working on this. We work on this clustering-based phenomena.
Right.
So we always try and capture projects in a geographical, co-location. So as long as it meets the criteria that we have, we are open to bidding anywhere and everywhere across the country.
Do you really think it is a game changer? Because I think the government is going to spend around over 5 lakh crore in the next 5 years. If I have to break it down to per year, over 1 lakh crore, that's the budget they have every year for it. So I just want to understand, is Bharatmala really a game changer for you guys?
No, so the budget that they have is a bit lower, but what they
Budget
do
is lower than the actual budget they have every year?
No, it's lower than the 1 lakh crore
Okay.
amount that you're saying. What it does is they're wanting to build about 80,000 kilometer plus of roads in the next 5
Right.
years. What that means is 16,000 plus kilometer of ordering every year. This year 2017 was when they were able to achieve that number. So it is not a very large, fantastical number from what they did. But what that really means is there are not enough quality players to do all of that, even the work that needs to be done right now. If you look at the execution, last year it was about 8,000 kilometers, while the ordering was 16,000 kilometers. So the execution is still far behind.
Right.
So this ordering is fantastic from the sense that we can see a great pipeline that's in front of us. Like every year you're waiting for the budget to know what's going to happen. But right now you know for the next 5 years what's going to happen. It gives us a lot more comfort in terms of investing in more equipment or hiring more people. It also gives comfort to the allied industries working and supporting the industry for the investments they need to make.
Right.
It spurs jobs. And most importantly, it gives out a very good signal to both domestic and foreign investors that the government, even though there's just 1.5 years left for the national government, they haven't sort of bowed down to the pressure of doling out social benefits. In fact,
Right.
they've focused on building infrastructure, and that's something that they came on, the promise that they had. So I think it's a great. Great signal by the government
Right.
of their intent.
Right.
Yeah.
Okay, I'm just going to squeeze in my last question. Your company has given stupendous returns to the shareholders. If I were to ask you any message for them, what would it be?
Keep invested. This is just the start. There's a lot more to come, and you'll see the quality of this company only going to higher places from now on.
Well, there you have it, guys. Rohan says, keep invested, and there's a lot more to come. With that, I'd like to thank you for joining us and
Pleasure's all
telling
mine.
us a little more about the company as well as the sector. And, we'll be moving on to the next trend then. And it has been a strong September quarter for Pidilite Industries, with the profits seeing gains of as much as 9%, with a 10% decline in other expenses. To help us decode the earnings for the second quarter further, we are in conversation with the Executive Director, Apurva Parekh. Hi Apurva, thanks for joining us. How has this transition to the GST been for you? And when do you see operations returning to full normalcy? Of course, we have seen some GST-related issues. What can you tell us about your transition?
See, we have seen a good transition to GST. Most of our channel partners, including distributor, retailers and customers, have adopted to GST, and things are becoming near normal.
And your revenues and margins also saw a healthy growth in the second quarter. What has led to the same?
There was a strong growth in consumer and bazaar product. Our volumes of our consumer and bazaar product grew almost 15%. So that led to overall growth of the company. In terms of margin, though the raw material prices have increased and had some impact on our gross margin, but our advertising and promotion expenditure were lower in this quarter. This was mainly due to timing difference when expenditure was higher than normal in the same quarter last year and lower than normal in the same quarter this year. This is a timing difference and should normalize in coming quarters.
Okay, and Apurva, and have you taken any price hikes given the considerable increase in crude as well as VAM prices recently?
Yes, in some product we have taken in this quarter. Yes, we would have taken in few products, but not across the board price increase.
And can you quantify the price hike for us then?
No, it is not significant. As you see, there is not a significant difference in our value and volume growth. So the price increase has not been very significant.
And the outlook on international business going forward, what are the key geographies that you see growth coming in from?
Right. So as far as international business goes, our main focus is on SAARC, first of all, where we have good operation in Bangladesh. We have one manufacturing plant and we are setting up a second plant there. We have good business in Sri Lanka and Nepal. So SAARC is our primary focus market. In addition to that, we are also focused on Middle East and Africa. So these three are primary focus market. In addition to that, we have some operations in Southeast Asia and Americas.
And Apurva, also a word on your product mix. Have you seen substantial changes there, and what impact can it have on margins?
See, as far as product mix goes, almost 81% is consumer and bazaar products. These are branded products, including brands like Fevicol, Fevikwik, Dr. Fixit. So they contribute to 81% of sale, and industrial product contribute to the rest. It may the contribution of consumer and bazaar product may gradually increase over a period of time.
Well, Apurva, thank you for joining us and taking us through this quarter's numbers. Well, Navneet, quite clearly the earnings have been very good, and it's apparent in the stock as well.
Yeah,
we're looking at good gains coming in there.
Stock's been trading with, I think it's almost a day's high at 795 with 3.5% gains for Pidilite. Good quarter for the company, but I still feel the industrial side of the business, the EBIT there was tad bit lower if you compare it both with June quarter or even on a year-on-year basis. But let's move on and discuss our next trend. Shift focus to quick service restaurants. Same-store sales growth for Jubilant Foodworks and Westlife Development has seen a considerable up move over the last 2 quarters. Is this trend here to stay? Or is this painting a picture of the discretionary spending environment in the country? Or does it show that increase in footfalls after the demonetization impact was off? To discuss this in detail and to give us an analyst view on this, joining us on the show is Aditya Joshi, research analyst at Anand Rathi. Hi Aditya, good afternoon to you, and thanks a lot for joining us today on Bloomberg Quint. Aditya, what are you making of these trends? We've seen good same-store sales growth number coming from the likes of Jubilant Foodworks, and let's also not forget the September quarter was the first one where GST impact was seen. Do you think these trends will continue in the coming quarters as well?
Yeah, so basically what has happened in QSR space is that post demonetization, the digital spending has gone up in the urban India as compared to rural India. And as these stores are concentrated towards urban India, the digital spend has gone up, and that is the reason the SSG has moved up for both these companies, Westlife and the Jubilant Foodworks. And we believe that going ahead with the positive base, with the low base of demon for next 2 quarters, I feel that the positive momentum will continue going ahead. And obviously it has to do a lot with their offerings that companies have made to the consumers.
Well, Aditya, if I were to look at the way Jubilant Foodworks is now turning its attention to not necessarily the increase in stores, but more towards operations, what can you tell us about that? Because if I look at the valuations of Jubilant Foodworks, they're substantially high in comparison to what we've seen trading at over the previous 3 or 4 quarters. What do you make of the company's plans, and what do you make of the valuations in that case?
Yeah, so as I said correctly, the valuation still remains rich for the company, but there is a strategy shift for Jubilant Foodworks. So from BOGO to EDV, what they are offering right now, there has been a strategy shift. So in buy one get one offer, they would have done more volumes as compared to what they are doing in EDV right now. But the company's focus is pure on profitability and bringing down the overhead, and also to bring down the non-operating stores, rationalizing their stores, optimizing the current stores. So Dunkin' drag, which earlier used to be around 240, 250 bips, that has come down to around 140 bips. So operationally, they are working a lot on bringing down their overheads, working on per store economics, shutting down their non-profitable store and focusing more on the profitability front. So that is a good initiative that Jubilant Foodworks has taken up. But if we see their top line, it was around in single digits, obviously with positive SSG, but the margins were very impressive this quarter. So we feel that the sustainability of margins will be something we need to look upon. On the other hand, Westlife Development have posted around double-digit top line growth with again positive SSG, and their margin has also improved, but primarily on account of their gross margin expansion as compared to their other expenses.
Yeah. Aditya, yeah, it's interesting.
So we believe that going ahead, the margins will improve. Yeah.
Yeah, sorry. Yeah, it's interesting you brought in Westlife Development as well. Now, I do want to talk about their peripheral businesses, which are peripheral right now. And there's an expectation of these businesses to grow substantially. So for Westlife Development specifically, you have McCafe and McDelivery. For now, the contribution is very low. Do you think that these can be catalysts to project, you know, the core business ahead when it comes to something like a Westlife Development? Similarly, their online sales for something like a Jubilant Foodworks, do you think that the proportion of online sales will go substantially higher in this case, say over the next few quarters too?
Yeah, so basically for Jubilant Foodworks, the online sales were obviously on the higher end as compared to Westlife Development, primarily because it was a delivery model from the initiation days itself. On the other hand, Westlife Development have started their McDelivery and McCafes, which will bring in the incremental sales and help in increasing their per consumer ticket size and also the bill size. So what will happen is that going ahead with more and more stores bringing in McCafes and McDelivery, their overall average ticket size will increase from the current levels, and going ahead for few quarters as well, the incremental contribution from these formats will drive the SSG growth and the margin for them as well.
Aditya, what's your house call on Jubilant Foodworks?
So we believe that the valuations are very expensive, so we currently have a hold rating on the stock, and same with Westlife Development. Both the companies are trading a bit expensive, so we have a hold rating on both of the stocks right now.
All right, Aditya, we'll leave it at that note. Thanks a lot for joining us today and giving us your views on Jubilant Foodworks as well as Westlife. But what a ride it has been for Jubilant Foodworks. I was just checking the 52-week low, December 26th. In 2016, it touched levels of 760. From thereabouts, it's almost trading at those levels of 1600 northwards or something.
If I may come in here, even at 760, it was trading at valuations which were a lot higher than the entire broader market.
Agam, this is the counter which has historically always been expensive. But I think in the last 1 or 2 years, because of the declining same-store sales growth figure, there was that impact seen on the stock price as well. But with the change in management, I think the kind of changes they brought in terms of shutting down stores which were not making money. Now that's not the trend we've seen. Opening lesser number of stores every fiscal.
Absolutely.
Till the time Ajay Kaul was there, we've seen that store expansion every year between 100 to 130. I think that number has been coming down. And as Aditya was also mentioning, cost optimization is a factor that they've been working on. So Jubilant Foodworks, for at least this year, it's nearly double. The counter is up over 90%, and 1628 is the level. Today, it's trading with gains of almost 1%. Well, just shifting focus to markets, they are where they were when we started the show. Nifty is still hovering around levels of 10,313 at the moment, and Bank Nifty is trading above the mark of 25,250. Just before we wrap the show, I just want to highlight a few stocks from the broader markets. If you could just pull up Saregama, it's trading with gains of almost 13 to 14%, And what's also perked up in trade today is IFP Industries and also MEP Infra. So a couple of counters in the broader markets which are seeing good amount of gains today, Agam.
Well, there you have it, guys. Nifty still holding on. We'll have to wait and watch whether or not it does hold on to that crucial 10,300 mark. But with that, it's a wrap on this edition of Trend Spotting. Stay tuned in the Bloomberg Quint.
Are we live?